Hey guys, welcome to the Financial Bunny TV. My name is Nicolette Mashile. I am also known as your Financial Bunny. Today's video is brought in partnership with FlexClub. And for those who do not know, FlexClub is a flexible car subscription model, but I'll tell you a little bit about it later on. So I want to talk a little bit about the risk of taking up long-term debt without actually doing your numbers. I want you to think about it, right? Taking up debt can really be dangerous if you have not done the future numbers. Of course, today you can apply, you can qualify, and you can afford, right? Say for instance, you earn 15,000 Rand and you are looking for a car, and the car is going to cost you, let's say maybe 5,000 Rand in installment sale, and then maybe 1,000 Rand for insurance, and maybe it takes you 2,000 Rand for petrol every single month. So essentially you are paying around about 6 plus 2, 8,000 Rand for your car. And it fits in perfectly into your budget. But what could potentially happen in the future that you may find yourself a little bit under pressure because of the car installment? One, the interest rates could change. Let's say you're on a variable rate. We all know that the variable rate obviously is that one rate that is going to change when the market rate changes. So the repo rate gets changed by Treasury, or the Reserve Bank rather. That also means that your rate is going to change, right? So the repo rate is the repurchase rate that the Reserve Bank sells money to commercial banks. And of course, when that rate changes, they need to change the prime lending rate that they are then extending to us as consumers. So obviously, if that rate changes, it means that your rate is going to change, then your installment is also going to change. So a slight change in your installment could really throw you off, especially if you are trying to fit it into a tight budget. But let's talk about other reasons why a long-term debt can get you into trouble. I actually remember a friend during COVID, or everybody knows what happened during COVID. Economy slowed down, some people lost their jobs, especially people who were in the gig economy and people who were freelancers, right? So he had a car, he was able to pay for his car every single month, provided that he had to work. But of course in COVID, we all went into hard lockdown and he was unable to work. So what happened is, of course, there was no credit life insurance policy in place for it to kick in, and the bank started doing the process to repossess the car. Here's the thing about when a bank repossesses a car. They repossess your car and they sell the car usually at auction. Now, the price that they sell it at, you do not have control of. So you may find sometimes that the bank sells below how much you actually owe them. And if they sell below how much you owe them, the difference that is left behind is still your responsibility. So even though you no longer have the car, it's been repossessed, it's been sold to a new owner, you are still liable for those costs. Let's look at another scenario. Let's say you've bought a car for 300,000 Rand. You've financed this car and your repayment with the financing involved comes up to 600,000 Rand. However, at your insurer, you've actually insured the car for its actual price, which is around 300,000 Rand. Then you get into an accident, and cross fingers that does not happen to you. You get into an accident, the car gets written off. So what does insurance then do? Insurance then pays out the amount that the car has been insured for, which then means you sit with a shortfall. That shortfall, you again are responsible for at the bank. Another scenario, let's say you do get into an accident. The car gets written off and insurance refuses to pay. It refuses to pay. The bank's skoloto does not disappear. That debt that you have, that credit agreement you have with the bank, it does not disappear. You are still liable to pay for it. Maybe let's look at a little bit more of a positive example. Let's say you're an entrepreneur and your business gets a big contract, a purchase order from a corporate or from government, and you need to supply, various goods or commodities, but you need fleets, you need cars to be able to do that, but you need them short term. So doing a credit application for cars just does not make sense because that ties you up into a long-term agreement of having a car. You could potentially find yourself in a situation where you lose that contract because you do not have the cars to be able to do what it is that you need to do to deliver on the contract. So now I've given you the doom and gloom. What are the other possibilities? And that's what we need to think out of the box. When we think out of the box, the first thing that comes to mind for me is FlexClub. As I mentioned, FlexClub is a flexible car subscription model. What these guys have done is they've given us the ability to have our car our way. So no long-term contracts, no credit checks. So even if you have bad credit, you don't have, especially because sometimes bad credit is not necessarily intentional, right? It might happen that you missed out on a couple of payments, or maybe there's a default against your name and you come into an opportunity, but because you've got bad credit, the banks are not willing to grant you or access or give you some access to credit lines. So now, if you're an entrepreneur, you are able to use FlexClub to be able to get access to some sort of car or fleet that you are looking for. But what makes it even more spectacular for me as I sat down thinking about it, I mean, this year I have to change my car again, and it's really, I'm not enjoying the process of trading in a car, because obviously you trade a car in and then service plan, or you start losing, interest in the car, and now you got to trade it in again and get a new car. But most of the time when you're doing that, the debt that you're actually accumulating gets higher and higher. So I've been toying around with what are the alternatives. And as I said, FlexClub really, really sticks out. And the reason why they stick out is that there is, as I said, no contracts. There's no credit checks that you're going to be doing. It's very much flexible. So if you go to their website, which is www.flexclub.co.za, you'll be able to see the steps that you need to follow to be able to get into a plan. So the first step is, as I said, getting onto the website, and then you need to decide what date you want to pick up the car and which date you want to be able to return it. You also can choose, just like you do if you're hiring a car, you choose a pickup location and then of course a drop-off location. Now the beautiful thing is that they are also in partnership with major car rental companies and fleet companies, which means that you've got a very diverse fleet that you can actually tap into. So once you've chosen your plan, once you've chosen the car of your choice, you then are able to add some money to your account, and then they will debit that amount or that fee that you need to pay, and everything is inclusive, right? So it's not like you're getting the car and then you need to still pay insurance on it, you still need to pay maintenance costs on it. No, they pay for all of that. The only thing that you're actually going to be paying for is the petrol that you're going to be using throughout whatever your plan is. Let's say things change, plans change, and all of a sudden now you have to bring back the car early, or actually you need to keep it for longer. You just log into your account, you go and you upgrade, downgrade, change your plan, change the date. So that's what we talk about when we talk about flexibility. Now think about you trying to do that with a car financier, going back to them after a month and saying, actually, I don't like this car that I bought, so could I change it for something else? You know what their answer is going to be. It's a new credit check. It's a new affordability check. It's a whole you selling that car and then buying a new car. So you've got to first settle that first credit agreement, and then you've got to apply for another credit agreement. And if you're an entrepreneur, you know what they ask for. It's basically drawing blood out of a stone. They will ask you for your health plan. They will ask you for your blood type. They will ask you what direction is your ear pointing in, just for you to qualify for a credit line, especially when you're an entrepreneur. So let's go back. Who is FlexClub probably the most perfect fit for? I would say, first and foremost, everybody. I do think the days and ages where we tie ourselves up in these long credit agreements, take up debt for car purchases, are long gone. Really, people talk about ownership, but let's be honest. Literally, psychology tells us that after you've bought your car, in the first 6 months, you already want to change it. There's some cognitive bias that says that when you buy a specific color of a car in a model, and you usually say, I've never seen this, I'm gonna be the first one with this car. Literally within a week, you have seen 5 of those same cars driving on the road. That's just psychology when it comes to buying a car. And as you get an upgrade, a promotion at work, generally many of us want to upgrade our cars immediately, right? You want to change your car. So I know for a fact that the argument of ownership is definitely not the one that is going to justify us taking out these long-term credit agreements that turn into debt, and then sometimes it just can become very uncomfortable for you and your budget. So I definitely think it is a subscription model that everybody can look into. But also, if you are a freelancer and you don't know when the next job is going to be coming, but you do need a car to fulfill the current job that you have, this is definitely for you. If you're an entrepreneur and your business, maybe you've got a contract that needs additional staff and they need cars, this is something for you, because after the contract is ended, you also terminate your plan with FlexClub. Think about a graduate who is in a job, or an intern. You have a job, you are being paid, but you are not full-time employed yet. So you actually cannot make a decision on 1 year contract of whether you're going to take up a car, especially with the new car agreements. I mean, some people are offering up to 84 months. 84 months to pay back a car. Guys, here is a tip. The longer the car credit agreement, the more you're going to pay in interest. Is this really what you are looking for? So please do tap into flexclub.co.za. Let me know how it goes in the comment section. I'm quite keen to find out what your guys' experiences are. I'm going to be taking up the challenge with FlexClub to see whether it works for me or if it does not work. Because at the end of the day, my car, my way. I will see you guys on the next one. Thank you very much.